because Pioneer Foods numbers came out earlier today. These are the numbers to the end of September. Revenue was up 10%, final gross dividend up 75%, and headline earnings per share up relatively modest, I think, 5%. In the Joburg studio is Andre Hanekom, the CEO of Pioneer Foods. Andre, thanks very much for joining us this lunchtime. I was quite interested to see that, your business is essentially staples. Okay, you've got the cereals fruit juice business, but you talk about wheat, maize and bread being relative sort of underperformers. And as I said, I thought they were staples. Why is that? Is that because people are sort of trading up, if you like, in South Africa, or is it to do with the competition, or is there another reason?
Yeah, I think for a start, the cost of raw materials went up significantly. A year ago, we were looking at the declining price of maize. You know what happened in America with the bad weather they had. So the price of maize went up significantly. So there's a few things coming into play. For a start, it gets to a point of affordability to the consumer. They're going to pay so much more for the food. We're seeing inflation in our basket up about 50% average, so that's fairly high. On the other side, there's also the cost of the consumer in terms of electricity, in terms of getting to work, the transport costs. So there's quite a lot of cost sort of onto the consumer.
Andre, we're going to have to hit pause on the conversation for now. We seem to be having some sound problems. So while we fix that mic with Andre, let's just take a look at what the markets are up to right now. Well, we seem to have fixed that, Mike. So let's continue, because you were going through some of the pressures that the business is under, where on the one hand, you've got high input costs to consider in terms of raw materials. On the other hand, you've got consumers under pressure. So the ability for you to elevate prices on that end to mitigate against some of those input costs are very challenging for you right now.
Yeah, obviously, as I say, so the consumer, the affordability is becoming a problem for us. And we've seen in our business quite a big decline in volumes in the past year.
Mm-hmm. Let's go through some of the other challenges you face in what's your reading of the consumer market at this stage of the game? I mean, we've been talking about retail trends and, where consumers are likely to spend, this Christmas season specifically. I mean, what's your reading of the health of the South African consumer?
Yeah, I think as explained, I think the consumer has quite a bit of his pocket money is being taken away by distribution cost to get to work, by electricity. We're sitting with very high raw material pricing. So the consumer is really under strain in our view. Obviously, sort of looking forward, that's very important for us. We expect a big American crop again in terms of maize. And by next year, March, April, we hope for lower raw material pricing and to give the consumer some relief in terms of pricing coming through.
Mm-hmm.
Andre, having a look at the corporate action in the food sector recently, notably Food Corp and Rainbow Chickens, when you look at that sort of activity, do you say to yourself, well, that means that we're in play as Pioneer Foods, or we should be also having a look at consolidating ourselves and have a look at some worthy targets? Has that been a consideration since this latest deal that I spoke about has been announced?
Yeah, I think where Pioneer Foods today stands is we've spent a significant amount of money in the last number of years to build a business, and we've becoming from a very small business, become a fairly big one. So there aren't too many avenues in South Africa we wish to enter. So obviously for us growth we see into Africa, but South Africa we cover the base of the basket that we want to offer the consumer. We have still got some work to do in terms of completing sort of a new product development. But sort of our view will be in South Africa, sort of our hands a bit tied. We need to look outside of the country's borders.
So let's take a look at some of those opportunities that have caught your eye and the territories perhaps that you're casting your attention towards when it comes to the rest of Africa.
Yeah, we already have businesses in Uganda and Zambia, so obviously we would like to get them bigger. They're fairly small. Mm-hmm. Everybody is talking about Nigeria. That obviously is also a very big market. So yeah, so to us, we are in Africa. In almost every country in Africa, we do sell juice and we do sell breakfast cereals, which manufacture in South Africa. So we know the market. So for us, the next focus must be, after finishing this African base, is to move into Africa.
Andre, I'm very interested to hear about your relationship with the retailers. We've been talking about the retail environment on the show quite a lot this morning. And it seems to me that when there is so much competition, perhaps the retailers, particularly the big ones with the big muscle, come to you and say, we cannot accept a 4 or 5% increase, even though inflation is 3 or 4% or whatever the numbers are. Do they exert pressure on you, and do you therefore have to occasionally sort of bite the bullet?
Yeah, I think in the end it comes down to what the consumer can afford. In our business, we're a fair size. We have some bargaining power, although I think the balance of power is the trade currently, but we do have some bargaining power in terms of our size. But the consumer must be able to afford, and price points and product offering is very, very important.
Mm-hmm. Of course, your ability to put a cost competitive product out there depends on your cost management and your efficiencies as well. I mean, what are we looking at there, and how much work are you looking at doing further still in that regard?
Yeah, I think back to our point, up to now, we're really looking at growth. We invest a lot of money in new capacity. So obviously, new capacity brings additional costs just to commission the new capacity. It means big launches of products. We look at our biscuit business. We launched quite a few new products. It costs quite a bit of money to get into the market. But the focus up to now was really into getting those products into the market. And I think we've done what we want to do in terms of the bigger picture. We can focus now more on our cost base. We can look at consolidation of sites. We can take some cost out. So there's still quite a bit we can do in Pioneer Foods.